Hello, everyone, and welcome to another episode of Your Money, Your Mission, the podcast designed to turn complex financial situations into actionable advice, powered by Johnson Financial Group. I'm your host, Kelly Mould, and today I have with me, for the second time, Loren Fellows. She is the VP of Mortgage Services, and today we're going to talk about the various stages of homeownership. Welcome to the show again, Loren.
Thanks for having me. I'm glad to be back.
We are delighted to have you. So let's get started with an overview of the three stages we'll be discussing today. First, we have that first-time homeowner who's often filled with excitement and a little nervousness, and then families moving off into their second home, which can be a huge transition. And finally, homeowners who want to age in place. I know that's a particularly popular trend right now as people think about where they want to be for their long-term comfort and support. So with each of these stages, why don't we start at the beginning, and you can share with us maybe some of the considerations, particularly for that first-time homeowner who I know is experiencing some different challenges these days.
Sure. Yes. A leap into home ownership, whether it's your first house, an upgrade, or maybe your final move, it's important to kind of understand what those options are. Mm-hmm. Where you purchase a home doesn't only impact where you live, but your lifestyle, right? Mm-hmm. So for first-time home buyers right now, what we're seeing is what's critical is that to know your numbers, right? Okay. Especially out as you're navigating this particular housing market. Beyond the payment, understanding that property taxes, homeowners insurance, and home maintenance are going to be expenses that you have. So budgeting for things like that are critical as you build the foundation for what is realistic in terms of what your family can afford. Mm-hmm. Some other things that are critical is getting pre-approved, not just pre-qualified. So in today's technology, there's a lot of options to just go online, get a letter printed out within moments that tells you that you're qualified to purchase a home. If you haven't had to provide some level of income and asset documentation to verify that you're fully approved, you probably don't have quite the document yet that you need to be a serious buyer out in this market. So it also helps you avoid heartbreak, right? So if you have a fully underwritten pre-approval that tells the buyer, or I'm sorry, your seller, it informs your seller that you have gone through the steps to talk to a lender, understand that you can afford the payment on the house that you're looking at. And it also helps, as a buyer, it helps you feel more confident that you're looking at a home that's within your price range.
Right. Well, I can imagine in today's competitive market, if you don't have the pre-approval, like you said, you're going to have that heartbreak because they're certainly going to look at pre-approvals more seriously than an offer by someone who's just been qualified. Was that
pre-qualified?
Accurate?
Yep, exactly.
Pre-qualified?
Exactly. Yeah.
And so you've talked about budget and financing and really understanding what someone can afford. I would imagine part of that conversation is also what kind of down payment they should be thinking about.
Yes.
So are you seeing people need more, less? How does the down payment piece work now, especially for a new home buyer?
For a first-time home buyer, what's nice is that there are grants and down payment assistance programs that are available to people that are first-time home buyers. Something that's important to note is a first-time home buyer is somebody that has not owned a home within the last 3 years. So you could have purchased a home prior to that 3 years. As long as you haven't had ownership interest in a home in the last 3 years, you do qualify as a first-time home buyer. So there are grants that lenders can often connect you with that help with that down payment requirement. Mm-hmm. There are some loan programs that require smaller down payments than others. So we don't need a full 20% down when you purchase a house. A lot of people think that that's the case. And again, there are multiple options available to people that might not have the ability to save for a down payment.
Sure.
So talking to a lender, again, puts some of those tools in your arsenal.
So a lender's going to know what those special loans are.
Yes.
So there are certain loans that would help someone who couldn't raise 20% or maybe any down payment. Is that?
Yes. Yeah, absolutely.
And are there any of those loan programs that you think are more commonplace for first-time home buyers than others that would kind of be used to that, to working through some of those issues?
So there's 3% down programs, there's 5% down programs, and that 3% can be contributed by the down payment assistance or the grant that the lender can help you obtain.
Oh, that's helpful. So
Yes.
it's not, so people kind of generally think 20%, but when you have an opportunity for a 3% or a 5% in a program that would help you come up with that, that's how someone who may not otherwise be able to do their first home is going to be able to get in there.
Right, exactly. And those things can also cover closing costs as well. So it can become very affordable given the right loan program.
So tell me a little bit about closing costs. I know we talked about budgets and the expense of the home and really thinking about what you can afford, but sometimes people forget about those additional closing costs.
Sure.
So how should people think about what those might be when they're looking at their first time home?
You bet. There's services that people are, as you're purchasing real estate, there's services such as the appraisal, the title insurance that ensures that you're getting that property free and clear of liens, encumbrances, really helping you know what the property easements are. Does somebody have access to your land? Things of that nature is what title insurance provides. There's lender fees, there's credit report fees, things of that nature. So those can range anywhere from $1,500 to $3,000. It's subjective. But then you also want to think about your homeowner's insurance. So when you purchase a home, you're going to want to purchase that first year of homeowner's insurance right up front. That's something that the home buyer can shop for themselves. There's also going to be, if you're establishing what's called an escrow account for your property taxes and your homeowner's insurance, an escrow is just a fancy word for a savings account for those items. So we typically will put 1 month of the property taxes into that escrow account. The nature of closing on a home, you don't make a payment typically the very next month that you close. So we'll put that 1 month of taxes and insurance into that escrow account so that at the end of the year when your taxes and insurance become due, you have that full 12 months of
you
savings
won't be
there.
behind. Sure.
Exactly. So those things you pay right at the closing table in addition to the down payment. So things that you want to consider.
You know, when I bought my first home, I remember they used to say you buy the worst home in the best neighborhood. The market is considerably different from when I bought my first home. So, but I still know that neighborhood is a really important consideration. What would you say people should consider when they're choosing the location of the home?
So think about your lifestyle, right? So do you have kids that school is important to you? Is it a neighborhood that's maybe growing, that's up and coming, so to speak? So oftentimes the statistic is that people will stay in their home for 7 years. That's not always the case. Some people are there for a lifetime. Some people are in and out, subjective to maybe a growing family, maybe a new job. But thinking about the resale of that first home is critical. So you want to make sure that you're purchasing a home in a neighborhood that somebody else is interested in it as well. And so thinking about your lifestyle is critical. So do you have kids that you're going to want to take to school? As I said, do you have recreation nearby? Are you somebody that likes parks and you want to be on a bike trail or something of that nature? Sometimes with your first home, with the amount of limited inventory that we have right now, you might make some small sacrifices, but don't make big sacrifices. The right house will come about. I always find that if just given some patience, this is something that is a big decision in somebody's life. So just have some patience with it. It's not something you want to rush into. So the right home will come.
You mentioned a couple of things earlier that I wanted to expand on a little bit. And one of them was home inspection and maintenance as part of the budget. And I know home inspection has become an interesting topic, especially in our more aggressive, mortgage market today. And people are waiving that. I know when I bought my first home, having that inspection and even an insurance policy for some of the big items that the seller was willing to do was, just a tremendous help to me. What is the scenario today?
I would never recommend purchasing a home without a home inspection. You may have a home inspection. The seller in a market like this might not be willing to remedy some things that pop up, but you should absolutely know what you're getting into when you're making a purchase of this size. So maybe you find out the roof is bad. Maybe you find out that the foundation is cracking. Those are things that you need to be aware of as you're moving into a home. These things can have big expenses. So right now, sellers are often patient enough to allow you to obtain a home inspection. Whether they'll remedy those items for you is another story. But
That's really the big question,
Yes.
right? Then as a buyer, you get to decide if you want to take on that burden because
Exactly.
you like the house enough.
Exactly.
I see. And I think you mentioned also a while back that it's important also to have an emergency fund for some of these unseen when you buy a house, it's kind of like unpacking. It never stays in the same place the same time. You have to get to know the house. So there may be other things that didn't come up that you want to take care of. Talk to me about that a little bit.
Have a nest egg for sure. You want to have a little something on the side, right? Whether it's just if it's the first payment that you're going to make, if it is inevitably something's going to happen, right? Home ownership is a journey, as they say. So understanding that this is now your responsibility. You don't have a landlord that's going to pay for, small repairs and things of that nature. It's important that you have a little bit saved up. So as you're considering, I would say early in the process, if you're considering you want to purchase a home, begin savings. Put money aside every month that you know is going to be for this home purchase. And as you spend the money on the down payment, closing costs, also consider having some reserves set aside as well that can cover some of those things that inevitably will come up.
Just in case time.
Exactly.
So once people have lived in their home for a while, and I know this happened to me, I outgrew it and had to move on to my second home. The family was larger. I needed more bedrooms.
Yes.
And so that was a little bit of a different experience. Tell me about the considerations for moving into that next home.
Yes. So it's such a nice thing, right? Equity is
wonderful.
Such a powerful tool. So equity, of course, is the difference between what you owe on your home and what the home is worth. That equity can be leveraged towards the down payment on your next house. So maybe you want to leverage that equity in a specific way. So maybe you want to have a lower down payment. You could take the equity in your home and save it so that you can do some home improvements to the new house that you're purchasing. Maybe you want to put all of that money down so that your mortgage payment is smaller. Maybe you want to have that money there for a nest egg, maybe. So
an emergency fund, so to speak.
Right. So leveraging that equity, I think, is a smart consideration, and it also helps you avoid stretching beyond a comfortable affordability. So
it makes a lot of sense. Like you have a lot of options once you have equity.
Once
right?
you have equity,
that is
yes,
the power
thank you.
of that. And when we talk about moving into a second home, we're still seeing a lot of people do that. Despite a change in interest rates. Some people have had lower interest rates, but they're still choosing to move. What are the most common reasons people decide to, essentially pull the trigger and try for that next house?
Right. It's lifestyle changes typically, or so maybe they've outgrown, to your point. Maybe they've outgrown the home they're in, outgrown their first home because their family has grown. Maybe they have more children and they need more bedrooms. Maybe their income has grown and they're ready to have a nicer, bigger home. They can afford that next step. So those are often what we're seeing right now. It's a lifestyle change, but also understanding the differential between the mortgage the mortgage interest rate that you currently have, and take into consideration other debts that you might have. Because again, going back to that equity comment, maybe you want to leverage that equity to pay off another expense that you have. So is it a car loan that's got a higher interest rate? Is it a student loan that you are in repayment phase? Is it a credit card that you want to wipe those things out with the equity that you've earned from the sale of your house? So having the interest rate isn't a one size consideration.
Right. Well, there's more to it, right?
Yes. You want to think about not just the interest rate on the house that you're exiting, but what are your overall expenses as you consider the move up to the next house.
This sounds like the perfect exercise for someone who has a financial plan and an advisor who can say, okay, let's run some scenarios. Let's see what this second house might mean and how we might best deal with the equity and how we make those decisions in terms of a long-term plan.
Yeah, absolutely. Yeah, having that conversation with your financial planner is critical.
Yeah,
I think.
And the transition from the first house to the second house. Well, I'll tell you, Loren, I've lived in my house now since 1998. There's nothing more terrifying to me than the thought of packing and moving
all that
from, I don't even know.
25 years of stuff, right?
So what are some of the tips you would give to someone to make that transition smoother?
Oh, declutter. I think before you decide to list your house, if that's something that you want to do, start thinking about what are the things in your house that you want to keep. What are the things in your house that you could maybe sell, put into storage, things of that nature. A realtor will really help you with that side of the home selling journey. They'll help you kind of understand, all right, if they're gonna start showing your home, how to, all right, we don't want to have a bunch of clutter and personal items all over the place. We want to just keep things as simple as possible, so other people can see themselves in the home. But that brings up a good point, which is talking to a real estate agent and making sure that you're working with professional. A lot of times people think in this market that if you list the home on your own, that you will get more for the property, where what I've seen in my experience is that people that work with a real estate agent actually create more competition and then end up selling their house for a little bit more.
So you would recommend getting that expert experience in the process.
Yes.
And you bring up an interesting point. Realtors will give you some advice on how to get the home ready, but I often hear people go, I need to put a lot of money in to get the best price for the house. This market feels a little different. Are people remodeling kitchens, doing landscaping? I mean, do you have any idea on like where you would put the resources if that's still a good idea?
Typically, kitchens and bathrooms give you the biggest bang for your buck in terms of additional value. But again, talking to a realtor first to understand what could I get for my house in its current condition versus what can I get for my house if I were to upgrade the house.
Right, to make sure
yes.
that that's worth the money, right?
Exactly. They'll look at other homes in the neighborhood and say, that one sold for this one's really comparable to your house and it had this upgrade in it. That will help you understand, should I do those? Should I spend the money on those upgrades as well? Or is it okay to not make those or to not spend that additional money?
Yeah, so I would imagine a real estate agent would be able to tell you what's happening, and the markets will dictate how much you have to do.
Exactly. They'll do what's called a market analysis for you. Yeah.
So, Loren, when we're talking about selling strategically, are sellers actually accepting contingencies for the sale of their home?
You know, it's subjective to the market. That said, we're starting to see a little bit more of that, but there are some options for buyers for buyers that want to put the cart before the horse if they're financially able. So there's, of course, bridge loan financing, which allows a home buyer to pull the equity out of their home that they currently own and use that as the down payment on the house they're looking to purchase. And then they could purchase the new house, assuming that they're comfortable with both of those payments in the interim. And then when the old house sells, then they would pay off that bridge loan. The other option is what we call a re-amortization. So a re-amortization allows a borrower to put, say, 5% down, the minimal amount down on the new house that they're looking to purchase. They don't take a bridge loan on the house they're exiting. They would just use their own savings, for example. And once they would close on the new house. And then when they sell their prior house, if that's after purchasing on the new home, they could take the proceeds from the sale of the home they just sold, apply it to the mortgage of the new house they took out, and the lender will recast their payments to reflect that they made that big principal reductions. Subjective to the lender, somebody might have an expense for that. They might charge a fee for it. But it would be another option to avoid a sale of home contingency.
Sure. Oh, that's great to know. And we talked briefly earlier that there is now this trend of people choosing to age in place, to stay in their homes long term. I know that's a conversation my husband and I have a lot. He wants to age in place, believes the stairs will keep us fit. I don't know where we're going to end up on this right now. We are continuing to stay in there. But this is a real thing. People do make some changes to accommodate. Can you tell me a little bit about that?
Yeah. Aging in place. So it's subjective to if you're staying in your own home or if you are looking to maybe downsize or right size to the next house. So yes, people are considering making that home their final home. And so what does my life look like? Do I need to have maybe 0 steps? Do I need to have a single level so that I can manage if I am, if you are using some sort of support to maneuver, maybe you want wider door frames. So people that are looking for that next house might be looking for some of those features, or looking to age in place, I should say, might be looking for some of those features in their next house. Condo living is really popular at that stage, where you have somebody that is helping with the exterior maintenance of the home. So you maybe don't want this huge yard that you have to take care of anymore.
Right.
And you can have somebody that is, you pay HOA, home association or homeowners association dues, and that would cover things like the exterior maintenance of your home. So whether it be yard work or maybe your downspouts or siding or things of that nature can be paid by some of those condo dues that people pay.
Right. That also sounds like another exercise for a financial plan too, to go, if I decide to downsize into a home that can better accommodate aging and the safety features that you would need to age in place, what does that mean? And what does home health care mean versus, not remaining there?
Yeah, and that's a really critical point, Kelly. A lot of times people think they want to move after they've retired. And at that point, your income has probably changed in some capacity. So having a conversation with your financial planner in tandem with your mortgage lender, this is what our plan is going to be. This is how our income is going to change. So having those conversations before you actually retire or make that change in your income is critical. Also thinking about what the other expenses you have as you age. To your point, you're going to maybe have some additional healthcare expenses. Maybe you're not bringing in as much income as you used to, and so you want to spread that money out in a different way. So again, thinking about not only what your income is going to be, but also what your lifestyle is going to be critical to kind of that aging in place home that you're thinking about.
Yes. And I know sometimes people think, maybe what they'll do is move in with their children, or they'll build an addition on the child's home and they'll live there and age in place. And there are some precarious things with doing that as well. I know.
Hopefully you like each other.
Hopefully you like each other. But as a practicing attorney, I know that there were some considerations people didn't think about. And that is, if you're doing this because your family and now you're going to remodel and mom and dad are going to work, going to move in, and all of a sudden one of the couples decides to divorce, and there hasn't been a contract or an agreement to figure out how that goes. And sometimes the couple that sold everything and built the addition and intended to stay in that home and maybe snowbird, now they've lost one of their biggest assets because they didn't take the steps to really plan through how they would manage this, spending time with the grandchildren, summering in the north while spending that. And so there's some real issues with that.
Yeah, that's a good point. There actually are, to avoid those kind of complications, there are loan programs that do allow children to purchase a home for their aging parent, and that loan would walk and talk like a primary residence. So as long as the parents are going to be living in that home, a adult child could purchase that property for the terms of what they would a traditional primary residence, which is a little known fact.
No, that is a really interesting fact. I actually had done that for my father and wasn't aware that was even an option.
Yeah.
Because sometimes then it's treated as a rental, and the mortgage options are, not as advantageous as a primary home. So this is a wonderful thing for people to know who have to be worried about how their parents are going to live out their final years.
Right. And you might want your parents closer to you, right? You might, to your point, right? There's grandkids. And so maybe you've been living somewhere and they decide, and you don't want them necessarily, maybe the grandparents have been living away from where the children are. And now that they're getting older, they want to be closer to the grandkids. Maybe the children want the parents to be closer to them just so they can keep a closer eye on them as they age. But they're not to the point where they need full dependence yet, right? They still want to maintain their independence and live alone. And so there is some features that can help with
Well, grandchildren are a big draw.
Right.
They are the reason my husband and I live here. We adore them. So,
right.
So,
we also want to think about second homes and investment properties, and how you weigh those two options. So, maybe you're at a stage in your life where you are spending a lot of time up north, and especially in Wisconsin, right? So maybe you spend a lot of time up north, and you think, all right, it makes more sense instead of renting over and over and over again for us to purchase a home up here. So considering, again, lifestyle, but what's critical is understanding the difference between a second home, which would be like a vacation home, and an investment property. So oftentimes an investment property is going to have different down payment requirements than would a second home.
Right.
Their interest rates are going to be a little different between a second home and an investment property. So really talking to a tax advisor, talking to a mortgage lender, understanding what your goal is. But that's an additional stage of the home ownership journey that I think is critical to touch on as well.
Yeah, that I would imagine that has exploded with the popularity of Airbnb type
Right?
residences, and especially in some locations.
Yes.
So,
And thinking about it from that perspective, if is the goal to be an income property, right? So do you want this property to be something that you and your family utilize as a vacation home, or do you want it to be a property that you're actually earning income on? It can be a little bit of both, but from a lending perspective, the way that a lender looks at that property is going to be maybe a little different than your goal. So having a conversation with your lender about this is my intention will help dictate what the actual occupancy of that home is. So we want to rent it out 8 months of the year. We want to rent it out 2 weeks of the year. Those are two different conversations. You could probably call it a second home if it's a couple weekends a year that you want to rent it out. But if it's something that you intend to rent out for the majority of the year, that becomes an investment property and has a little bit of different mortgage terms than, say, a second home would.
any final thoughts, Loren?
Yes. So at every stage, home ownership is a balance between ambition and affordability, dreams and practicality, excitement and responsibility. But the key is making informed, thoughtful choices that support both your financial well-being and your lifestyle. So whether you're starting out, moving up, or downsizing, the smartest move is one that aligns with your long-term vision. A home, after all, is the foundation for not only where you want to live, but how you want to live.
That is really helpful, Loren. Thank you so much for joining us again today. We really appreciate it.
My pleasure. My pleasure.
And thanks to all of you for joining us. And be sure to subscribe so you don't miss out on future episodes of Your Money, Your Mission, the podcast designed to turn complex financial situations into actionable advice, powered by Johnson Financial Group.
This podcast is not a recommendation to buy or sell any investment or financial product. Whether a particular investment or financial solution is right for you depends on the facts of your particular situation. Please consult your own professional advisors prior to taking any action based on the content of this podcast. Products and services offered by Johnson Bank, member FDIC, and Johnson Financial Group Company. Loans are subject to credit and property approval, bank underwriting guidelines, and may not be available in all states. Other loan programs and pricing may be available. Certain conditions, terms, and restrictions may apply based on the loan program selected. The term of the loan may vary based upon program chosen. Property insurance is required. If the collateral is determined to be in an area having special flood hazards, flood insurance will be required. Private mortgage insurance may be required on loans with less than 20% down.